So you own your home today, and now you're ready to buy your next property. Whether it's a vacation home or an investment property, the two have totally different requirements. First, let's talk about the differences between the two. A lot of it has to do with intent. So if your intent is to rent the property out, then that's an investment property. If you're going to use it as a vacation home for your family, utilizing it several times out of the year, then that would be a second home. So let's start off with the 5 key components that will really differentiate the difference between investment and second home when it comes to qualification. So first is rates. Mortgage rates for these options are higher. They're generally about 0.5% above primary purchase rates. So those are just a little bit different. The risk is higher, translates into higher rates. 2 is the down payment requirement. So for second homes, down payment is 10%. For investment properties, it's as little as 15, but the more you place down, the more attractive the rate, the more attractive the cost. Third is reserves. So reserves are the proceeds left over in the accounts or investments after your down payment's paid out of pocket and the closing cost. So reserves are higher for investment properties. A lot of it depends on the number of properties that you currently own and the size of those mortgages. So it just depends. Vacation home also depends on the overall strengths of your application. So that would just be a case by case, but reserves are required. Investment purchases, those reserves cannot be a gift. So they've got to be your own funds accumulated over time. Fourth is DTI, so income to debt ratio. Both options, we have to use and utilize that new mortgage against your total debt. The good thing about investment properties is we may be able to use future rents to help offset that debt, which could help out with that price point. Last but not least is credit scores. So scores are important, especially for this particular option or program. The higher the score, the better the rate, the better the cost. If your scores are below 700, it doesn't mean you don't qualify. It just means that the picture overall may not be as attractive in cost or rate. We can always walk you through that. If you currently have a property, you don't have the reserves or the down payment needed for the second home or vacation home, cash out refinances are a great way to utilize the equity that you've gained over the years to go ahead and purchase that next home that you may be dreaming about or want to hit for the goals for this year. So guys, I hope that helps. If you have any questions on any of these options or topics, let us know. We'd love to help. Have a great day.